Hello and welcome. Welcome to this second panel of the day, the travel rules stopping illicit flows and fraud in crypto markets. My name is Manesh Samtani. I'm the editor at Regulation Asia. Now, as most listeners would agree, stopping illicit flows in crypto markets would be a major boost to the legitimacy of the industry as a whole. Certainly in any market, there will always be bad actors, but every step towards ensuring crypto markets are as clean as possible does help. So in this session, we will discuss the travel rule along with its implementation challenges, progress made so far, and the risks of non-compliance. Joining us today, we have Pelle Braengaard, CEO at Notabene. Hi, Pelle.
Hello.
We have David Lewis, the former executive secretary for FATF and currently managing director for Kroll's AML advisory practice. Welcome, David.
Hi, everyone.
And finally, we have Alex Kim, CEO at VerifyVASP. Welcome,
Hello,
Alex.
everyone.
Excellent. Thanks so much for joining us. So I just want to kind of kick off by maybe asking David to set the scene a little bit. You know, in terms of illicit flows in crypto markets, in previous years, financial crime was seen as rampant, I suppose. Today, it's more widely understood that traceability within, blockchains provide the capabilities to guard against some of this illicit finance. So David, could you talk a bit about the current financial crime trends, how it's changed, maybe recent typologies in crypto markets?
Sure, very happy to do that. So maybe first I'll step back a little bit because a lot of people seem to think of the Financial Action Task Force as a regulator or regulator of regulators. The reason that the FATF exists is to tackle money laundering and terrorist financing, and more recently the financing of the proliferation of weapons of mass destruction. And that really started with a concern about the harms caused by drugs trafficking, in the late 80s, early 90s from South America. And so that's at the heart of everything we do still today. It's not about just promulgating regulations for the sake of it. It's about identifying risks from crime and terrorism and seeking to mitigate those through global standards. And that's the root of the FATF's action and interest in virtual assets. The risks have changed. But they've also just grown in nature. So if you look back several years, we saw ISIL trying to raise money through Bitcoin and the dark web. So the terrorists have been interested in this in a while. We've seen organized crime looking at using it for a range of criminal activity. And these days, that's shifting a little bit. So we're seeing more fraud, more tax evasion. But the two things that we're seeing, I think, more prominently than anything else is ransomware. And that's particularly worrying because we see virtual assets used in most ransomware cases, and the use of ransomware and the threat from ransomware is massively increasing. So that's a big concern. But we're also seeing it being used by professional money laundering networks. And as organized crime groups sort of contract out their money laundering to professional networks, you're going to see virtual assets used by professional money launderers for all the range of criminal activities that organized crime groups are involved in. So it's no longer just the kind of, the odd case of terrorist financing or, a new novel way of money laundering. It's really got the potential now to become mainstream. It's not there yet, but we're seeing a lot more cases in fraud, said tax evasion, and ransomware, and with professional money laundering networks adopting it, there's a real risk that it could take off.
And so how are authorities actually combating this? And I guess, given the measures they've been taking, what have been the impacts on the volumes of illicit transactions or illicit flows? Pelle?
Yeah, I mean, there's been a strong growth of the use of blockchain analytics tools for helping on traceability, and both industry, participants, VASPs, exchanges use these tools to help manage the risk, but regulators as well and law enforcement use these tools and use them actively. And I think they actually show the power of blockchains, of public blockchains, of crypto, and actually have helped law enforcement be less scared of say Bitcoin than they were maybe in the beginning, because they can actually see transaction flow in real time. So there have been some missing aspects, though, which is really where the travel rule comes in. In actually being able to send counterparty information along with a transaction between exchanges. And this is one of these areas where we think it can really help with ransomware cases. Because what we often hear from regulators is that, or from law enforcement actually, is that they can see the money move across, and then it hits an exchange before and the money's out of the blockchain system, and at that point it's in theory lost because it hasn't been identified at that point, and they can't reach that exchange in time.
Yeah, I guess a number of the other tools that are kind of coming into the crypto space. You talk about doing proper KYC, the travel rule, of course, which is what we're here to talk about. I suppose these will also address some of the illicit finance concerns in crypto. Now, I recall last year the FATF said implementation is going too slowly. David, could you maybe talk to us about why this was, perhaps a bit about what progress has been like since?
Yes, so the FATF has, since it introduced the travel rule and the global standards in this area back in 2018, has reviewed implementation twice in two 12-month periods up until last year, and actually implementation has been pretty slow. The last review was middle of last summer, and there I think we were still looking at something like only a quarter of countries in the world having started to take action. And those jurisdictions that have committed to the FATF standards number over 200 now. So there's a lot. It's basically every jurisdiction in the world. It's bigger than the UN in many respects. But what we're seeing, I think, is jurisdictions taking their time to decide on whether they want to attract this business, whether they want to do this business or not. And a lot of this comes down also to their understanding of risk. And this is the first thing that FATF requires of countries, regardless of which area of business we're talking about. They need to understand their risk, and because this is a new area, countries are taking their time to do that risk assessment and to understand the risks they face, and then combine that with the interest they have in developing this as a business area that they might want to attract. So I think that's been a key reason why countries have kind of been slow to adopt this, working out whether they want to want to ban these things or attract them or just tolerate them. And I think there has been a degree of chicken and egg. They waited for more guidance from the FATF. They're still trying to understand how they should implement this. There is a training requirement. So I think it's for a whole host of reasons. The FATF hasn't looked at implementation since the summer of last year, but we know from discussions with jurisdictions that their implementation is ongoing, but it's still quite slow. Countries in jurisdictions in the Asian region are still looking at consulting over the course of this year, and it may be into next year before it starts to be implemented. And so that's and that's for more of the progressive jurisdictions, and this presents some real challenges, in particular for the travel rule that I'm sure we'll come on to discuss.
I guess one of the jurisdictions that has really pushed ahead with implementing the travel rule fairly quickly, compared to other jurisdictions anyway, is Korea. I know the deadline is coming up in about a month. And Alex, you have quite a bit of experience in dealing with that. Can you talk about implementation progress in Korea, some of the challenges the VASP has been facing, how they were addressed, and perhaps how some of these lessons from that experience can help as you look to roll out compliance operations in other parts of the world?
Sure. I think Korea will be quite interesting example on travel rule adoption. If not the first, I believe Korea is one of the first countries to adopt travel rule nationwide. So in Korea, we have a licensing regime for VASP under FSC, and we have enforcement date as 25th of March. So we have 31 days left for nationwide enforcement. And that is a very sunrise issue, and we have a lot of teething problem, as you can see. The challenge we face is that this is the first time in the world, so there isn't any like the example we can follow. So we engage with our regulator a lot to determine the small the decisions we need to make to collaborate. And also we realize that since this is we have counterparties, this is not something you can do alone. You need to talk with your counterparty to harmonize the messaging protocols and everything. So we as a VerifyVASP, we managed to make a nationwide travel working group with more than 20 the licensed exchanges in Korea to work together to tackle this challenge. And there are many the problems like on the field. So let's say you are licensed VASP. You were busy getting a license until like last week. Now you got the license. Now you got like 30 days left to comply. There's a massive challenge for you. And you didn't have time to prepare for this. So everyone is rushing toward the deadline. In that case, we as a licensed exchanges, we work together to help each other because we know that we need to comply from the deadline anyway, right? So in that sense, collaboration within licensed exchanges were like critical the element to make it happen. But still, for next 31 days, we will face a lot of the troubles down the road, and we need to hammer down those the outstanding issues one by one.
And Pelle, are you seeing similar challenges in other markets when it comes to implementation, or really, I don't know how far ahead you see the other markets or behind?
I mean, Korea is definitely really far ahead. Singapore as well. But of course, Korea is a much larger market than Singapore. So what we're actually seeing is Korea is moving other players to start implementing the travel rule quickly because they don't want to lose transaction volume going to Korea. But the Korean problem, if you want to call it a problem, we see similar aspects of it around the world, and it actually shows some of the fundamental issues with the travel rule, because as Alex was saying, you have to work with your counterparties on this, and you cannot just implement the travel rule at a national level. Like, I mean, yes, you have to in the beginning in the case of Korea because it's the only option, and it's been a very difficult situation for the industry there. But we also see similar situations with national groups around the world where they've taken the approach, let's just deal with our local regulator now. But crypto is not, in most cases, a local market. It's an international market. And there's a huge risk of implementing everything in a local manner, which is, for example, where Alex and VerifyVASP works with us at Notabene on figuring out how to deal with the international interoperability. But this has been an issue where people have looked at it, what does our regulator say? And not looked at what everyone else's regulator is saying, because you really have to look at who are your main counterparties, what are their regulators saying? And it doesn't really matter if you want to protect your transaction volume, what your local regulator says, as much as what your counterparties say. So there has been this, really just to put it short, national groups are very, very short-term solution for it. It has to be solved internationally. Yeah.
I guess drawing from these lessons, and maybe each of you have something to say on this, but what would you say is needed from regulators to sort of help the industry comply with travel rule? Maybe start with Alex, Pelle, and then David, you might have something to add.
I can share some experience on our side because we are also running a regulated digital exchange in non-Korean region as well. So we also run the upbid exchange outside of Korea, like in Singapore, Indonesia, and Thailand. And Indonesia has travel obligation. They're going to enforce from 29th of April, which is 1 month later than Korea. As you know, Singapore already adopted travel rule, and Thailand, they will adopt travel rule. And since we have some experience in the Korean market of enforcement, we are actively engaging with local regulators where we are operating to share our lesson learned. I think and I wish it helps to harmonize a travel rule obligation across the region.
Yeah, I agree with Alex there. It's like one of the most important thing for regulators to help the industry become successful at implementing the travel rule is really to try to harmonize things. And I think the easiest way of doing that is look at the FATF travel rule, and then before you start localizing it too much, just focus on that aspect of it, on the FATF rules, because then we have a common language. And then maybe at a later step, you can start, as you've learned, as the industry learns, you can maybe start adding a more local flavor to it at that point. But it's really important to be in dialogue with industry. Everyone's learning about this. We know regulators are learning. The exchanges are learning as well, because it's a new concept for everyone. So we have to be open to learn and work together here.
Okay, I guess more broadly, and maybe this is a silly question, but do you see the travel rule as being effective? In that, does it go far enough? Especially, I guess, when you consider interactions with, for example, DeFi platforms. Alex?
Well, DeFi platform can have many different nature. It could be regulated VASP in certain countries. It could be unregulated. So travel rule, when you adopt travel rule, you need to know what is the nature of your counterparty. And the FATF suggests to conduct counterparty due diligence before engaging with that entity. So you may want to identify whether they are FI or not, or whether they are reliable party to transmit the personal data of your customer or not. So based on this assessment, you may need to treat your counterparty DeFi platform in different manner.
Yeah, I think it's important here to look at what's the reason behind the travel rule, what are the actual goals of the travel rule, rather than trying to apply it word for word, because it doesn't really make sense in the DeFi context necessarily to implement the travel rule as specified by FATF. And this is where we also need to maybe have a little bit more guidance in the future on what are the goals of the travel rule, which I think for a lot of us is fairly clear. But then with new technology, we should also be able to work with regulators and finding out new ways of handling those cases where the travel rule as such, and we're a travel rule services provider, travel rule may not be the right solution for DeFi use cases.
Sorry, Manesh. Yes, I was just going to add to that, and I fully agree with what Alex and Penne have said. Harmonization is actually critical for the travel rule, as the guys have said already. But it's not the only thing that countries need to do. And going back to understand the reason for the travel rule is important. I'd also say, as of now, decentralized finance, if you're just marketing yourself as a DeFi business, you may not be caught. But if you're actually an owner operator of a DeFi project, then you may well be caught. So, and when we say caught, we're not just talking about the travel rule, we're talking about the whole range of FATF recommendations and the same things that banks need to do, and not just having the originator and beneficiary information go with the transaction. So you're talking about understanding risk, record keeping, transaction monitoring, sanctions screening, the whole host of things you need to do across the FATF standards. And one particularly important part of that, which is relevant to the travel rule, is international cooperation. And that's going to be really difficult if you don't take a harmonized approach to travel rule on non-DeFi, and we have to understand how that's going to work in the DeFi market. But international cooperation, if you have cooperation in particular between supervisors, then you're going to be better placed to be able to deal with that.
Thanks so much, David. Just to sort of switch gears a little bit, Pelle, can we talk a little bit about the actual implementation of the travel rule? What are the technology steps, data storage, security, data privacy issues, things like that? Maybe both Pelle and Alex, you probably both have something to say about this.
Sure. Yeah. So one of where a lot of the industry focus was in the beginning was in creating kind of Swift-like messaging protocols. So there's been a bunch of different of these protocols created over the last couple of years. Unfortunately, there are a lot of these protocols, but the industry's probably been focused on the wrong area, at least initially. So a lot of the protocols were created before people even understood what the travel rule was and the operational and compliance issues companies are facing using it. There are, of course, newer protocols like VerifyVASP, and also what we do within our system that help on those aspects of it. But from a technological solution, yes, there is a messaging aspect of it where you need to send a message to collaborate with your counterparty exchange. But there's a lot more to it because you have to do additional data gathering from your customers. You need to perform due diligence. You need to be able to do all of this at scale. There's like a whole bunch of different decisions that you have to do. So it's not an easy thing to do. It's not something that can be solved exclusively with a messaging protocol. So there's a bunch of technical challenges that in many cases only the largest exchanges have the resources to do this themselves, which is why we focus not so much on creating a new protocol ourselves. We just focus on that aspect as part of Notabene and are agnostic around the actual messaging part of it, which we think is probably the least difficult aspect of the travel rule.
Let me introduce our initiative here. So VerifyVASP is a travel solution based in Singapore. We worked on this initiative since 2 years ago, and we started as a collaborative support from Upbit and Chainalysis. As you may know, Upbit is operating regulated digital exchange in Korea, Singapore, Indonesia, and Thailand, and all countries adopting travel rule. So we had our necessity. We have to comply this travel rule, and we knew it since 2 years ago. And to comply, we needed a solution, a messaging protocol, but there wasn't solution out there. So we ended up building our own solution, working together with the Chainalysis. So that's how we came up with this solution. And during implementation process, we faced a lot of challenges, starting with the counterparty due diligence, as suggested by the FATF, starting from the USBAC, the CBDDQ, and technical implementation, which will allow us to securely and immediately transmit personal data without intervention of the middleman in the compliant way described in the ISMS or ISO IT security guidance and PDPA and GDPR. So there was a lot of the challenge from many different angles, and to navigate this challenges in the best way, we had to initiate this with our internal effort first. Now, since the tool is developed and live, we are adding more regulated VASP in this alliance at the moment. So that is how we ended up with this VerifyVASP initiative.
How many regulated VASP are part of the initiative now? Can I ask?
Sure. In Korea, we have, I think, total 25 regulated VASP, and among 25-ish, we have 21 regulated VASP in Korea. And Singapore, MS is licensing the DPT services at the moment. So we are formulating nationwide a travel working group to comply with the travel obligation in Singapore. And Indonesia, we have at the moment less than 20 the registered crypto asset exchanges under BAPEPTI, the regulator in Indonesia. And we have a formulated nationwide working group there. In Thailand, we are closely communicating with the regulator and the regulated digital asset exchange and brokers to formulate a nationwide working group.
Thanks, Alex. That sounds like a lot of work has gone into that initiative.
It is.
One other point I wanted to raise. So I guess for VASP that don't get on board or are operating in jurisdictions where regulators maybe haven't caught up yet, what do you see the impacts from a business perspective? I guess what are the impacts or risks of not being compliant with the travel rule?
If I may add some comment, well, it can be risk or it could be opportunity. So what we are seeing now is that, so let's say you are in certain jurisdiction and you don't have the travel obligations, then you may think that I got nothing to do with the travel, but it's not, because your counterparty may have travel obligation. So if they enforce travel rule, then you may lose the business from that counterparty, perhaps, right? So in that sense, if you want to secure the corridor with the counterparty who is enforcing travel rule, then you need to get prepared to transmit the personal data from to the counterparty. And if others cannot secure the corridor, if you are the only one securing the corridor in your the industry, then you may have some upper hand in that manner. So we are seeing many VASP which do not have travel obligation in their jurisdiction actively joining the VerifyVASP Alliance for the purpose of securing connectivity with the jurisdiction enforcing travel rule.
That's interesting. We have talked a lot about travel rule, but I suppose it's not the only thing that VASPs need to consider, when it comes to sort of meeting regulatory requirements now and in future, and generally just combating problem of illicit flows. David, what else do VASPs need to consider?
Yeah, so I touched on that a little bit earlier. As I said, it's the whole range of FATF standards. So everything the FATF expects of banks, financial institutions, it generally expects of VASPs. And that starts with doing a proper risk assessment and ensuring that you have the policies and procedures and controls you have in place as a firm are proportionate to the risks that you identify. And then there's, you have to have compliance officers, you have to have record keeping, you have to have transaction monitoring, you have to understand what your obligations are when it comes to targeted financial sanctions, and ensuring that you're not facilitating transactions for designated individuals at the UN or at national level. So it's really the whole range of anti-money laundering measures that you need to consider, and not just the travel rule.
I guess as we discussed the travel rule as well, just kind of reflecting that people have seen it as sort of using a centralized approach, being used to tackle a sort of decentralized market. So will that sort of impact the effectiveness of these types of transparency measures? And I guess, are there unintended consequences to travel rule implementation?
Well, many people may confuse between decentralized, unregulated, or anonymous, perhaps. And perhaps maybe because we are also running regulated VASP and providing travel solution, we believe the trust system is the core. So in order to better trust system, we may need a decentralized element so that trust system won't get broken by unreliable middlemen, perhaps. And decentralization itself is not the objective. So here, the objective is building a better trust system. And to achieve that objective, decentralization may help. But nevertheless, in case of decentralization, there is the risk of anonymous transaction, especially with the exposure to designated individual entities, perhaps. So to protect this trust system from those illicit activities, we believe transparency is helping and needed. In that sense, we welcome travel rule, and we think that is a necessary element in this ecosystem.
Yeah, I think in addition to that, I mean, I don't think it's that contrary to to the philosophy of crypto, because the philosophy of crypto is that everyone should be able to perform transactions in a non-permissioned way. But that also means you have the right to make decisions about which transactions that you do. And really what this is doing is setting up a structure for businesses who are centralized, who live in this real world, who are regulated, to figure out how do they manage the risk here. It gives them the tools to do that. There's another, normally when we talk about unintended consequences, we look at something bad, but there is actually an unintended consequence of the travel rule that we actually feel is very good with the travel rule, which is that if it's implemented correctly, this actually also gives benefits for end users of crypto. Because right now, I've been in crypto for 10 plus years. I'm still scared every time I enter a Bitcoin address into my wallet, because it's going to this, address, and I know once I send it, there's no way of getting it back if I made a mistake or something like that. But introducing the travel rule brings trust, and like to say, kind of brings a humanity into this, because now I'm not just sending to a Bitcoin address, I'm sending to Alex, and he's at Upbit, and I can send that. I know if there's something goes wrong, Upbit can fix it, right? So it actually adds a good unintended consequence to it. And I don't think we should skimp that. We shouldn't look at it as an industry, this is all bad. I think actually this is an important step of us growing up as an industry, creating better tools for people. And that also helps stop fraud, because if I'm sending to someone, a named individual who I know, then the counterparty, the counterparty exchange can say, well, wait a minute, this is actually not the named individual. There's a safety part here, right? And we should actually show the benefit to customers as well. And I think that helps a lot, and it helps really with the overall goals of FATF, the regulators as well, but also as the industry. Let's make this a safe environment as it can be.
I think, Manesh, that's a really, really important point. Transparency leads to trust. And although we see in any kind of criminal market, they're always, you're displacing activity into other criminal activity. Criminals want to be seen as legitimate. So actually, whether you're talking about criminals or others, you're going to be driving the adoption of standards here, because that's a safe place to do business. And if you want your customers to feel comfortable, then they're going to want to be operating with businesses that have in place the travel rule and have in place these other measures. And so I think actually there's a real positive side to this, which is often overlooked. And we've seen, the massive take up in cryptos in recent years hasn't gone down with the introduction of global standards. It's gone up. Global standards driving the adoption of virtual assets, because people are starting to feel safe and comfortable with them as a result.
Yeah, no, that's interesting. I guess we touched on DeFi a little bit earlier. I'm sort of wondering in the longer run. So like DeFi, unregulated exchanges, there's OTC desk, unhosted wallets, P2P platforms, and so on. A host of unregulated platforms at the moment. Do you expect these types of platforms or entities to eventually come into scope under the travel rule? I know you were mentioning, Alex, earlier that that's sort of a lot of exchanges in unregulated jurisdictions are doing so voluntarily to kind of be able to transact with the regulated exchanges. But yeah, what is your view on sort of these other types of platforms?
So in this case, we need to dig in a little bit deeper into regulation. So for example, in Singapore, in MAS regulation PSN 2, travel obligation exists if you are interacting with the beneficial institution. And by its definition, beneficial institution is a financial institution. And if you are unregulated, you are not FI. So travel obligation in Singapore does not apply if the counterparty is unregulated VASP. And that is also consistent with the FATF guidance, because FATF guidance mentioned that you need to make sure the counterparty have a capability to handle the personal data, which is sensitive information, with care. and you don't want to anyhow give your customer personal data to unreliable party, right? So in that sense, unregulated VASP, they won't be the counterparty of the travel rule obligation, but nevertheless, unregulated VASP does not mean that they're bad boys. Sometimes their jurisdiction may not have the licensing regime for VASP yet. So because of that, they remain as unregulated, but it does not prohibit the business with them directly. So you can choose to have connectivity with unregulated VASP in case you can have a measure to mitigate the risk. For example, you can allow only verified first-party transfer to the unregulated VASP as long as you can really verify with your user, perhaps, or perhaps with the help from the unregulated VASP. And what we are seeing in the field is that unregulated VASP, they wish to join travel the alliance, and they know that they don't need to comply to travel rule, but they are willing to cooperate to verify the beneficiary of the counterparty wallet. In that case, if they can satisfy the ordering institution jurisdictions the travel obligation, they can secure business. And the ordering institution also can comply with the regulation in their country.
I guess the other big topic that's been thrown around a lot is the NFTs. And I know the FATF's position on NFTs, and it's still early days. But what do you think the chances are? Maybe I'll put this to David. What do you think the chances are that the travel rule will eventually apply to sort of NFT marketplaces and so on?
So I think it's entirely possible. You said the FATF has a position on NFTs, which is currently that they're considered as collectibles, but it really depends on how they're used. And there's a good comparison here with the traditional art market, and arts and antiquities has been a long-standing area of concern for FATF and jurisdictions around the world. It's not regulated everywhere for money laundering, but I think you'll start to see that happen more. It is in some jurisdictions, and if you're using NFTs as an investment, as a way of storing or transferring value, which happens in traditional art market, then you could see it happening with NFTs as well, in which case they would be considered and subject to the standards. So I think we have to watch the space quite closely.
I just think it's a really good example of how to look at regulation going forward, because they say, if NFTs are just collectibles, nothing's needed. But if it's not, and then it's that if, right? And this is where I think, as both regulators and as those of us who are operating in the industry, we need to maybe not always be looking for like a way around regulation, but kind of look at philosophically at this. How can we actually think through these kinds of things? We're contacted regularly by NFT marketplaces who are looking to implement the travel rule, because they do understand that the reason people are purchasing and buying and selling NFTs is because is for investment purposes and their particular platform. So they already realize that this is not really a loophole that they can continue to hide behind. But we need to be better at looking at these kinds of things. So I think the NFT is just a good, fairly clear example of, in theory, maybe not, but the reality, probably yes, right? And that's what it's like with all kind of new technology, right? You have to look at it and try and figure out where things fit.
Yeah, and I guess most regulators don't currently have plans to regulate NFTs. I think it was just a few days ago in Korea, the FSS, they had a mention of NFTs in their annual work plan, basically planning to monitor it. So again, Korea leading the way there.
If I may add some word in the NFT won't be the last new type of asset class of the virtual asset. There will be like another type of virtual asset coming down the road, right? And I totally agree with Pelle that NFT, if it's like excluded from the travel rule, it could be a loophole. And FATF guidance mentioned that NFT is not VA unless it is used for investment purpose. But when many people they invest in NFT or when they buy NFT, I'm quite sure that many will have investment purpose, right? So in that sense, it will make sense to deem it as a virtual asset, which is subject to travel obligation requirement. But in practice, many NFTs transactions, they are associated with unhosted wallet. So it falls into unhosted wallet or unregulated VASP problem as well. So my opinion, will requiring VASP to transmit the personal data to unhosted wallet, which is facilitating NFT, the transaction will be unrealistic. So it could make more sense to establish a first-party, verifiable first-party transaction regarding to NFT if there is need to include NFT in the travel obligation.
If I could just add one final comment here is, I think it also shows that regulators shouldn't be scared of unhosted wallets, because unhosted wallets are very transparent and like it's very, very easy to see. Like most unhosted wallets, particularly the people who are buying NFTs, interacting with DeFi, you can monitor everything, using blockchain analytics. You don't necessarily have to rely on intermediaries to be able to manage those kind of things. The tools are there. I know that it's a learning experience, and there's constantly new things being built all the time, but all the data is there forever. So it's always just, as we saw with the Bitfinex case the other day, it's just a matter of time, right? The tools will be built, the data will be there, bad actors will be caught. Right. And regular people who are just, doing things the right way, they're not a high risk.
And we saw that change already in the last few years. Just a few years ago, everyone thought that, it was a lot more anonymous than in fact it is. And now law enforcement are pretty confidently following the money with a whole range of tools. And it's not equivalent to cash. And you can investigate, and there are some pretty innovative ways of investigating and following the money, and we're seeing seizures of virtual assets in the US and elsewhere. So there's a much higher degree of comfort now and investigative ability to be able to follow this, whether it's hosted or unhosted, because of the blockchain.
Excellent. Thank you. We just have a couple of minutes left. What do you see as the path ahead? What do you see comes next? How do we accelerate implementation? Maybe let's start with Alex.
Well, travel is here to stay, and as regulated VASP, they have to comply. There's no workaround, and it really helps to cooperate, even though you may compete with others. And it really helps to engage with regulators a lot, often, casual way, because we're going to have a lot of teething problem. But after we enforce travel rule, then we can bring in better transparency, and we can afford a wider and deeper decentralization. That is my take.
Thank you, Alex. Pelle?
Yeah, I agree with everything Alex says, but I'm really excited actually by the industry and by where things are going. I'm excited that regulators are taking virtual assets seriously, and actually not just looking at it as a risk, but looking at it as an opportunity as well. I'm really excited about what we can start doing, as I mentioned before, when we start actually bringing this information out to end users. This is an industry that's going to grow. It's going to be more transparent. More and more regulators and law enforcement are just going to become crypto native themselves and actually just prefer this particular space. So I do think that it's a really exciting time going forward. And with anything new, there's always, things are always scary and unknown, but there are so many opportunities for us to build a really, really great, safe and transparent global financial system on top of these technologies. And this year is a little bit of a turning point on the industry when it comes to travel rule. Everyone's going to be implementing it, or they may have serious difficulties running a business like by next year, right? But it makes it safe for everyone, including traditional FIs, to start getting into the market as well.
And finally, David, any final thoughts?
Well, I agree with both what Alex and Pelle have said. It's really important that regulators just get on with this. They have to bite the bullet because the slowness we've seen is presenting real problems for businesses. It's creating regulatory arbitrage. And whether you're a country that's going to ban it or not particularly want to have VASP in your jurisdiction, you're still going to have to comply with international standards. You're still going to have measures in place for non-compliance. And so just get on with it. And countries are starting to do that. But I think, sometimes we can overthink things. So the faster that everyone can get on and implement the standards, I think the better we'll all be.
And with that, we are out of time. So again, thank you, David. Thank you, Alex. Thank you, Pelle. We'll wish we had more time. We'll have to pick this up another day. Interesting to see how your next 30 days pan out, Alex. Thank you for joining us today.
Thank you.
Thank you.
Bye, everyone.
Bye.
Bye-bye.
So just next up, we have a session called Digging into the Dark Side, Sources of Wealth, Emerging Crypto Crime Trends and Typologies. Thank you very much. Bye for now.